Welcome to Mech Talks, brought to you by the Mechanical Engineering Sectional Committee of the Institution of Engineers, Sri Lanka.
So I'm representing Sri Lanka Institute of Nanotechnology, and I'm heading the technology transfer division at Slintech. So like we have been involved with a lot of technologies, a lot of innovations, and we have done a lot of tech transfer work at Slintech. So I'm going to share my experience related to that, and so that's why we named the talk as innovations to market. So it's like it's I would like to share the experience on like how to take innovations to the market, and also how to commercialize your research, or how to commercialize your inventions from one point to another. So when you take about this entire journey from taking innovations from its birthplace to the end target, which is the commercialization, so it's actually a very hectic journey. So it's like a roller coaster ride. You will have lots of ups and downs, and at the end, like you will, once you achieve that target, so you will be uh, flourish with a lot of joy. uh, once we go through this journey, like I'm not going to talk about like how to do the invention, because like one of the key aspects of this entire journey is to have the right invention. But since most of y'all are engineers and scientists and inventors, so I'm quite sure, so you know that game very well. So now once you come up with a with an invention, uh, so you have to put lot of effort to come up with an invention which is quite suitable to the market, and then taking that invention to the commercialization would be like evenly difficult, or it's evenly harder. So now when you go through this journey from when you try to leapfrog from innovations to commercialization, typically there are two paths out of many pathways. Like there are two commonly practiced avenues. So one of the avenues, we call it as the entrepreneurial journey, or rather the startup journey. And the other part is where you secure your IPs, or the intellectual property, and then try to monetize this intellectual property. So I'll touch base on both of these avenues. So first we'll start with the entrepreneurial journey. So entrepreneurial journey is in fact not for everyone. So entrepreneurial journey is like for people who are really willing to put their heart and soul and mind and everything to that invention that they have done, and they will drive that project through to the end and ensure that the project will get commercialized. So when you go through the entrepreneurial journey, so it's like a typical journey where you set up a startup company, then like you may have to hire people to run the company, then you have to do marketing campaigns, then you have to come up with production facilities, you have to do the production distribution channels, and then put the product to the market. But in order for you to do all these aspects, in order for you to have all these elements in place, you have to have money. So that's the critical part in this way. So in order to get money, like, or in order to raise funding, so you can go to investors and get the investments done. In terms of raising investments, or in terms of raising funding, so there are a few ways of doing it. So say if you are like a very early stage startup company who's trying to come up with a prototype, who's trying to come up with an invention, so usually we call that stage as the pre-seed funding. So at the pre-seed funding, usually there are typically three type of people who will invest in you. So we call them as three Fs. Uh, so one F is for family, one is F for friends, the other F is for fools. So in the sense, like your family and your friends, they might really believe in you, because if they know you very well, if you know that you are passionate, they will definitely like if they are capable of investing, then like they might give you some sort of an investment to get your prototype out to the market, and then later on they might get the return back. But so if you are extremely lucky, you might find a total stranger who doesn't know you at all, but that person might be willing to invest in you. So that's why we call that F as the fool. So you might go through this cycle to get the initial pre-seed funding, and once the pre-seed funding is done, then the next step would be to raise capital, or raise funding for your other operations. So at this particular stage, then you can go to angel investors, or you can go to venture capitalists, and those are the type of investors who would put money, or who would put funding behind your innovation to take it to the next stage. So when you engage with VC firms, or rather venture capitalists, or with angel investors, the typical model is they will like fund your company. They will give a funding to your company, and in return they will take an equity from your company. So in that case, like you should be able to like value your company, and based on your company valuation, based on the contribution that they make, you can set aside a certain equity to them. So that's like the entrepreneurial journey that you all of you may have heard of. So I'm going to touch based on a slightly different angle, which is the IP protection, and how to monetize your inventions through IP. And in this particular case, if you talk about IP, or rather the intellectual property, in if it's related to an invention, so most likely uh, it will be a patent, or it will be like an engineering design. So in this case, once you generate the intellectual property, or rather the IP, so you can commercialize this in a few different ways. So one of the ways would be through IP sale. So then you come up with a price tag for your IP, and then like you find an investor and you tell them, okay, you take my IP, and this is the IP value tag. And once you get that transaction done, you will transferring your entire intellectual property rights to the client. So once you do that, you won't have any intellectual property retained with you. So you can't claim on your IP anymore. But there's another avenue where you can focus on, which is called the licensing model. So in the licensing model, what you can do is you can keep your intellectual property with you, and then you can target different clients, and you can let them use your technology, but the intellectual property belongs to you. And in order uh, for using your technology, that client will pay you a royalty fee from the sales that they make. So when you do the licensing, there are two ways of doing that. One would be the exclusive based method. So based on the exclusivity, the other method is the non-exclusivity based method. So in the sense, like when you go through the exclusivity based method, you will find a partner and you will tell them, okay, I have a technology, you can use my technology, and uh, do the commercialization work, do the production or whatever. But I won't give my technology to anyone else. So you are the only person that I'm providing it to. So the non-exclusive method is where that you engage with multiple entities, and you will allow those entities to use your technology. So when it comes to exclusive deals, the royalty that you could charge uh, would be like a premium. And when you go for like a non-exclusive deals, like you might not be able to charge a premium royalty, because you will have multiple parties to involve with. Then now, why licensing model is better than IP sales? So it's actually a business decision that you all have to think of. Like say, okay, if you need quick cash, if you want to sell off your IP, so that's totally fine. But then again, say if you are an inventor, and if you think to do further modifications to your technology, and if you want to do different alterations in future, so it's always good to keep the IP with you, and then license it to someone else. So when you license it, actually there are a lot of benefits. Like for say, for example, you are a startup company, and you want to get into, you are in a specific domain, but you come up with an invention, and you want to get into different market segments where you can't get into. So in that case, what you can do is like you can license your technology to other people on a non-exclusivity basis, so in any other form, and you can get into different market segments. So if I give you an example, we all know there's a brand called Beats by Dr. Dre. So Beats by Dr. Dre, so it's a brand, or it's a company specialized in speakers. So what they did was like they were very dominant in the speakers market, but then again they partnered with computer companies like HP, and also mobile companies like HTC, to integrate their speaker technology to into mobiles and laptops. So through that, they got into a different market segment that they could never dreamt of. So which is the computer market segment, PC market segment, and the mobile market segment. So likewise, when you, uh, if you can strategize properly, then like your licensing options could be very handy in that way, because like you can actually target different market segments, and you can reach into different markets. And the other advantage is like say you come up with a technology, and like if you have to go through the startup route, as I said earlier, like you have to set up a company, you have to hire people, then you have to have the correct skill set to do the formulation, then like you like I mean formulation or whatever the invention, then you have to have a capital to put up a factory, then the production, marketing, distribution, and that whole gamut of things that you have to do. But imagine you come up with an invention and you have the license. So rather than you going through that entire startup life cycle, you engage with a company who's already in the market, and if you transfer the technology to them, like then your technology will go to the market at a very rapid pace. Like for example, like say I come up with a new formulation to make soap. So if I come up with a new formulation to make soap, and if I'm to put the product out to the market, then I have to go through that entire cycle of production to marketing to distribution to raising funding, and also that will take a lot of time. So instead of that, I can always reach out to a company who's already in that domain, who's already making soap, and I can tell them, okay, I have a formula. If you use my formula, you can sell it to the end users, and I will get a royalty out of the sales that you make. So it could be a minute percentage, but through that, like you can actually go to the market at a very rapid speed. So those are like the few advantages that you would get uh, by doing licensing over IP sales. Then the third method would be like going into joint ventures. So joint ventures in the sense like you come up with an IP and then you get involved an investor into your company. So essentially it's like another startup formation where you will have a company formed, and then you will be driving that entire joint venture to get the returns. Now so we spoke a lot about like ip generation and the strategies that we can inculcate to monetize this IP. But the biggest question now is, okay, like we can come up with IPs, but how do we know the exact value of these IPs? So this is actually the biggest question that anyone would have. So it's like one of the inventor's dilemma, that because no one would know what's the exact IP value would be. But there are like basic tools that you can use. Like there are three methods. One would be like the cost based method, in the sense like you can calculate the cost that you have incurred for your research work or your other R and development work, and based on that, then you know the cost that you have incurred. So once you know the cost, you can put a small markup for the cost, and then you can come up with an IP value. So the second option would be the market-based method. Market-based in the sense you can always do some sort of a survey and see whether there are similar sort of transactions, similar sort of IP sales had happened in the past. So if so, then you can benchmark your IP value with that, and you can always negotiate based on that. Then the third method is the most lucrative method, and that's what we commonly adopt. So it's called the forecast based method. So in the forecast based method, what we do is like we forecast how much of revenue that we can make out of the IP that we have, and based on that, we always tell, okay, our IP could be this much. So that's how you usually value your IP, and you come up with a price tag to your intellectual property. But having said that, ultimately it all boils down to uh, different companies buying capacity or the buying power. So like say you value your IP for $100 million or whatever, and at the end of the day, the company is willing to pay only $10 million. So then it's a different dialogue, and it's a different business negotiation that you have to do, and you have to settle that separately. Uh, so I think I covered quite a bit on this IP topic, like how to come up with an how to monetize your IP through different commercialization strategies, and like how to put a price tag to your IP and so on. So I don't want to make this like a standard lecture series. So I would like to now wrap up the session, and maybe we can move on to the Q&A session. Then like we can dive deep into different areas if you need any further clarification.